You work hard every day. You put in long hours on the job site. You use your skills to build. You use your skills to fix. You use your skills to create. When a client pays you, the money lands in your bank account. Seeing that large number can make you feel proud. It can make you feel successful. You might think you have finally made it. This feeling of success can lead you to spend. You might buy a new ute. You might upgrade your tools. You might take your family on a well-deserved holiday. You see the money, and you believe it is all yours to use as you wish. This feeling, however, can be a dangerous illusion. The first concept you must understand is something called fake wealth. Fake wealth is the feeling of being rich that comes from looking at your gross income. Gross versus net, remove tax and GST, and you are left with net income. Gross income is your invoice total before any deductions. For example, you invoice a client for $2,200. That is your gross income for that job. It feels like a lot of money. This feeling is powerful. It encourages you to spend freely without thinking about future obligations. But gross income is not your real income. Your real income is what is left after setting aside taxes and necessities. The difference between gross and net is where the trouble begins. Spend based on gross, and you are spending money that is not actually yours. You are spending the taxman's money and the GST money. Do this, and you create a future problem that arrives with a bill and a due date. The full $1,100 arrives in your bank account. You think, great, I have $1,100. You spend $300 on a new power tool. You spend $200 on a nice dinner. You feel like you have plenty left over, but you have forgotten about the money you owe. 10% GST, $110, must go to the ATO. You also need to save for income tax. Estimate 25% of $1,000, $250. So $360 is not yours, only $740 is your net. Your real spendable income is roughly $750. But you have already spent $500. That leaves only $250 for everything else. Fake wealth disappears fast, creating real pressure. Thinking in net terms is the first step to freedom. Now that we understand fake wealth and the GST ghost, let us talk about the solution. The solution is not complicated. I call it the three-bucket system. It separates your money so you can see what is yours to spend and what must be saved. It brings clarity and removes anxiety. Physically or digitally, you divide income into 3 places as soon as you get paid. Set up 3 separate bank accounts. Separation creates a barrier that prevents accidental overspending. Each account has a specific job and rules. Like sorting laundry, this system cares for each dollar properly. It protects your tax money from being spent. It shows exactly what you have for business and life. Build the habit. Automate where you can. Rest easy knowing the money is already set aside. This system puts you back in the driver's seat. Money flows in, then immediately out to the other 2 buckets. Sort the money the same day it arrives. Keep the revenue balance near 0. Use automatic transfers if your bank supports it. Manual moves take just a few minutes. Do not spend from the revenue account. Spending from revenue breaks the system and revives fake wealth. It commingles tax money and invites trouble. Same day, near 0, automate if possible. Set rules that sweep a set percentage to other accounts. This foundational habit powers the system. The tax vault is your most important bucket. This money is not yours. It is held in trust for the tax office. Treat it as untouchable, only for BAS and income tax. Use a separate savings account, ideally at a different bank, with no debit card to add friction. First move the GST, then move 30% of pre-GST income. The vault protects you from tax time panic. Now, a bigger job at $5,500. First, quarantine the GST. Next, move $1,500 for income tax. The tax vault now holds $2,000 for this job. $3,500 remains. Transfer the remainder to your operating account. Keep revenue at 0. Use operating for materials, fuel, your wage, and other business costs. Your operating balance is your true cash flow. Want new equipment? Check the operating balance after bills and your wage. If yes, buy without guilt. If no, wait and save. Stop deciding from gross. Decide from real cash on hand. Security comes when tax obligations are covered and your spending is truly yours. You have probably heard, "Go ahead and buy it, it is a tax write-off." That sounds like it is free, but it is a dangerous myth. Deductions reduce taxable income. They do not give your money back. You still spend real cash first. Suppose you buy a ladder for $500. It is deductible as a business expense. If your tax rate is 30%, you save $150 in tax. The real cost is $350. You still need $500 in the bank to buy it. Believing the write-off myth leads to overspending and drains cash flow. A deduction saves a percentage, not the whole cost. Fund purchases from operating, not from imagined tax savings. First ask, is there enough cash in operating to afford this now? Tax deductions help, but cash flow is king. You have learned about fake wealth, the GST ghost, and the 3-bucket system. Now it is time to stop worrying and start acting. You can set up the foundations in about 12 minutes. Small, deliberate steps today prevent massive headaches later. First, open 2 fee-free online savings accounts. Name the first one Tax Vault for GST and income tax. Name the second Operating Account for business spending. Your existing main business account becomes revenue. Second, create a rule. Sort every dollar immediately. Move 30 to 40% to the tax vault to cover GST and income tax. Move the remaining 60 to 70% to operating. Keep revenue empty. Finally, live out of your operating account, business expenses, and your wage. The tax vault is off limits for everything except paying the tax office. Check balances weekly. Build the habit and leave fake wealth behind.